Hi folks, this is Hyman, and I want to talk to you about CAD Yen and looking at it on its weekly chart. So each candle equals a week in time, and I want to talk to you about the Doji breakout strategy on the weekly time frame. It's simple because you don't have to know, you don't have to analyze the trends. You don't have to know a lot about candlestick pattern analysis or anything like that. A Doji just simply looks like a plus sign on a chart. This is technically a spinning top, or some consider it doji, but it's more like a plus sign on a chart. It's where the pair really does nothing, makes no material move within the week. It kind of starts and finishes the week pretty much about the same point that it ended it, and I'll show you more about that in detail here in just a minute. But what you do is you take your doji and you just mark a line on the top and the bottom of the doji, or you can just note those levels, whichever. A lot of charting packages, you can put your cursor over the candle and it'll tell you the high and low of the weekly candle, and you can just note those levels if you don't want to or don't have the ability to put the lines on your charts. And so what you do is, as soon as the candle starts to break either side of it, you hop on board. So if it breaks this way, you buy. If it breaks this way, you sell short. You don't wait for a closed candle. The moment it starts to break, you get involved in the trade. And the reason why is because after low periods of volatility, there tends to be high periods of volatility, and in periods of directionlessness, there tends to be followed by periods of just sharp direction. And part of that reason is because as CAD Yen is trading, traders are in it. Some are long, some are short, and so you've got a battle going on here. Something is going to go up, something is going to go down. Those that have bought have their stops below the lows of the period typically. Those that have shorted have their stops above the highs of the period. Well, there's traders that have been in this, for a week, and they've placed their bets and built their positions, and there's at least a week's worth of stops of people all around the world, right up just above the doji and right below the doji. So picture a cluster of stops there, stop losses, and when the pair finally runs into a patch of one of them, it just fuels the fire basically and shoots it one way or shoots it the other, depending on which patch of stops it runs into. And so as excuse me, as a lot of people are becoming wrong on their trade and getting it wrong, you're actually stepping into the trade at that point and getting it right at the time when most of the people are getting it wrong in the trade. So let's take a look at this and blow this up really big so you can see what happens here. The week started here at the top left edge of this candle, went as high as 80.58 and went as low as 79.02 roughly, and then back up and ended the week pretty much where it left off. So start and finish here is not that great of a difference. So it went kind of all over the map, and then when it was all said and done, when the week shook out, I mean, it pretty much was back where it started from. And so that's what a doji is. It's just, here's another one. It's just a little body in the middle with two long wicks on either side. Some of them have almost no body to them at all. They'll look exactly more like a plus sign, like this does, or like this does. Some of them will have a small body. They're quite common, and so all you do is just put your line or note the level right above or right below, and in this instance you would buy above 80.58 the moment it starts hitting above that, or you would sell short basically below, I would say below 79, that round number, since this could be a pip or two off. And so you would short in that instance. And all you're looking for is the breakout. As soon as the pair moves in your favor a good 20-30 pips or so, you would want to move your stop up from wherever you've got it to about break even or so, maybe a little past. These trades can go usually minimally 20 to 30 pips, and I've seen them go 100 to 200 pips. So it's even though you're looking on a weekly chart, weekly time frame, you're still talking about something that's more of a near-term trade and a fairly fast trade, because usually the pips that are going to be made in that, the bulk of those pips will come within the first hour and a half of trading once the side is breached. So we're talking about a relatively small amount of time, a relatively good bit of pips that can potentially be made in that time, just playing off of hopping into trades once the direction has been picked and once it's running into a whole bunch of stop loss orders in the market. So that's the deal. This is on the CAD-yen weekly chart. And so I've just noted the last week, which is the closed candle, because remember, the week that you're trading in now is not a closed candle, because it hasn't reached the end of the week Friday, as of this filming. So you take your most latest candle, and it doesn't have to be on CAD-yen pair. I mean, I just sifted through all my pairs I watch, all my volatile pairs, and this one happened to have a Doji, so this one became the trade candidate. That's how that worked. So watch for breakouts like this. Whether this one has broken out or not, by the time you see it, at least you get the concept, and you can sift through your charts on the weekly time frame after Friday's market close. So it's something you can do over the weekend or Friday evening or Sunday morning, whenever, and then get ready for a breakout of your two levels the following week on your trade. And usually you'll find that there's usually at least one or two of these that have formed a weekly doji out of, when you sift through about 20-something Forex pairs out there. I mean, there's a lot more Forex pairs out there than that. Just, that's some of the most commonly traded, some of the most volatile out there. So hope that has helped you and taught you something today. And thanks so much for your time and for viewing this video. If you'd like to find out more about what I do in the markets and with our newsletters, just click on the link below and you'll find out more about what we do. Thanks so much for watching. Bye-bye.